You know, when I first got into real estate, I set out a goal for myself to make $4,000 a month. Now, when I hit that, I upped it to $10,000, then to $25,000, then to $50,000, then to $100,000. And when I was hitting that consistently, I asked myself kind of an insane question. Could I do $1 million in a single deal? In this video, I'm going to teach you how to have financial intelligence, grow your wealth, and absolutely fucking dominate for 2019. I'm Cody Sperber. Let's talk about getting this money. People see my lifestyle now. They see the houses and the cars and the crazy vacations, and they think that I'm just some guy who got lucky or that I inherited a bunch of money. But that couldn't be farther from the truth. What they don't see is over a decade living below my means, reinvesting my money, turning it over and over and over, growing my wealth, building businesses, creating a foundation for financial success. When I say financial intelligence, what I'm talking about is the ability to build a wall around you and your family that protects you for generations to come. It's gaining the skills and capabilities and the foundation to be able to go and not only gamify the game of making money, but dominate it. So in this training, I'm going to show you how I went from being poor to becoming financially stable, and finally, the third step was creating generational wealth. You're not going to want to miss this. Subscribe to my channel, smash that like button, and make sure you turn on those post notifications. So what I want to cover first is where most people start. This is where I started off, and that's broke. Now, unfortunately, about 80% of people in America are in this situation. It just means that there is more month at the end of their money. They don't have their foundation set up the right way. There is zero possibility that they're going to be able to get out of this vicious cycle. We're not able to learn this stuff, and therefore we're stuck, all right? You cannot build wealth and grow an empire on a faulty foundation, on a shaky foundation. And so what I want to teach you is the foundation, right? And unfortunately, this is how poor people have their lives set up. They have this short-term mindset. They're not willing to sacrifice for long enough in order to build the foundation so that way they can create their empire. And there's some misconceptions that at least I had when I was broke, when I was poor. One of them was I thought, well, you know what? I'm just going to, go get a job, work my way up the corporate ladder. I'm going to work my way to wealth, right? I'm going to save my way to wealth. Every dollar I earn, I'm just going to stuff it in the bank and I'm going to save it. That couldn't be farther from the truth. You cannot save your way to wealth for two major reasons. Number one, taxes. Every time you get paid, Uncle Sam wants their piece. Number two is money devalues over time. So if you're just saving your way to wealth, you're actually moving a little bit backwards every single day. The other misconception I had is I'm going to go get this good job and then I'm going to go buy a house. In over 30 years, I'm going to pay that house off, and it's going to be this big asset for my retirement. And if you've ever read the book Rich Dad, Poor Dad by Robert Kiyosaki, he kind of enlightens us on this idea that your house that you live in is not an asset. And here's why. We're paying, over a long period of time, a tremendous amount in interest on the loan. So that $100,000, $150,000 house that you bought is actually costing you over the 30-year period as you're making your payments. Probably costing you, let's say a $100,000 house, it's probably costing you $180,000 or something like that, depending on the interest rate. The true definition of an asset, in my opinion, which is real simple, is does this thing make you money or cost you money? My house, it's either going to be an asset to me, meaning I'm going to buy a house and rent it out and create cash flow and income from it, or I'm going to live in it, and what that means is there's an opportunity cost. Right? As I'm paying down the mortgage, guess what I'm not doing? Taking that money and investing it into something that's actually going to produce me income, produce me a return. What you should do is rent where you live for a period of time, live below your means. I'm going to show you how to go from the poor house to being financially stable here in just a second. and stop misbelieving that your house is an asset. The other thing I thought is the government's going to take care of me someday. We got Social Security and Medicare, Medicaid, whatever. I'm good. The reality is Social Security is going to run dry. I think the number is like 2025 or something like that. You'd have to go look that up. The government's not going to be able to take care of you. In fact, you are the only person responsible for your financial independence. What I want to show you is the way most people start. And most of us are taught from a very early age, go get a job, work your way up the corporate ladder. So we go get a job to earn money. And unfortunately, every time we earn money, Uncle Sam wants their piece and we're paying taxes. And the way most poor people have their financial structuring is they have a personal bank account. And every time they get paid, their paycheck gets deposited in a personal bank account, and then all of these things start happening almost as fast as you get the money. Rent or a mortgage is due, you pay for your food, all of your different bills start getting paid, pay for your car and your gas and your cell phone and everything else. And then there's this piece right here. This is kind of the unknown, but I know for me and for a lot of my friends at the time, when we didn't have a lot of money, we had multiple generations living in a single house. And my dad or whoever was making the money was kind of supporting the brothers and the sisters and the aunts and the uncles and the cousins and everybody else who had their hand in the cookie jar and were taking care of family. And this is the end result, more month at the end of the money. And there's zero escape from this until you do what I'm about to show you to do, all right? Which is the most crucial part of this whole process. And even if this is the only thing that you take away from this entire training video, I've done my job. Now I'm going to show you how to go from the poor to becoming financially stable in 2019. This is phase number 2 in the creation of generational wealth. And how we do it is setting up a financial foundation the right way so you can grow upon it. Now, unfortunately, only about 15% of people in America ever make it to this stage. So here's how it's going to look. Financially, I'm going to show you how to structure your bank accounts. First and foremost, you're going to keep your job in the beginning, all right? And nothing's going to change there. But now what we're going to do is we're going to start a business. We're going to start a side hustle. And as you keep your job, this is your safety net, we're going to get another business, a little side hustle, up and off the ground and running. Now, I highly recommend that you look at potentially starting a creative real estate investing business, all right, specifically wholesaling. You can flip houses with little to no money down. You don't need credit. You don't need a real estate license. You don't need to know anything about construction. You just need a little bit of specialized knowledge. Now, this is where I started, all right? So I went from having a job as a bookkeeper, then as a side hustle. While I was a bookkeeper, I started a wholesaling business. And when you start a business, the cool thing about starting a business is then you can set up what's called a business bank account, right? And when you set up your business bank account, I want you to set up one more bank account at the same time, and that's a tax account. Once I got the business up and running, what ended up happening is I started making profit checks for my wholesale deals. My average wholesale profit was anywhere from $5,000 to about $15,000. About 12 grand on average. So every time I closed a deal, maybe it was 1 a month, 2 a month, 5 a month, when I really grew my business and scaled it, I was doing 20 a month. And so as I grew the business, I had all these profit checks coming into my business bank account. Now, the cool thing about having a business that's different than just having a job with a personal bank account is you have this down here, which are business expenses, which you can deduct from the income that your business is making. And normally, you can't write this stuff off. Normally, if you pay for your cars or your gas or your cell phone or your food, vacations, lodging, that kind of stuff, you can't write it off. But when you own a business, you can write off your car, your gas, your phone, your mileage, your oil, your insurance, your car washes, healthcare, tires, office rent, your marketing expenses, employees, food, lodging, all of this stuff you can write off, which offsets the amount of taxes you're eventually going to owe. Because when you start making real money, taxes are one of your biggest enemies. That's what you're up against, the deflation of the value of the dollar and owing Uncle Sam. So what we're going to do is we're now having 3 bank accounts: your personal bank account, your business bank account, and your tax account. And so whenever, let's say you make $10,000 in your wholesaling operation that month, what's going to happen is you're going to deposit that money into your business account. You're going to leave, let's say 33% of it is going to stay in the business account. 33% is going to move over to your tax account, and we're going to clear off taxes in real time. And then what you're going to do is you're going to take a draw or a paycheck for the other 34%. And that's going to drop into your personal bank account, and then you're going to live your life from it. And our ultimate goal by having this kind of a financial structure are, number one, you've now created multiple streams of income. They actually say that the average millionaire has at least 7 streams of income. So you're on your path to creating multiple streams of income. Pay taxes in real time, right? My ultimate hope is that you continue to live below your means. You have the right mindset, which is short-term sacrifices for long-term gains. And the last goal is to save up your first big chunk of money. Now, I recommend making a goal of, let's say, $100,000. I like $100,000. It's a big number. You know, it feels good to say, man, I saved up $100K. But you really just want to save up at least 6 to 12 months worth of your lifestyle at a bare minimum. That way, if anything ever happened to you, you had to quit your job or your business wasn't going that well that month, you had enough money saved to protect yourself and your family during this time. You do this in 2019, and I promise you by the end of the year, you're going to be a very happy person. Now, with that said, let's move on to step number 3, which is creating generational wealth. So what do I mean by creating generational wealth? Well, at least here in America, when they say generational wealth, that means that you have at least $5 million worth of assets or more, and only about 5% of the population actually fits in this category, all right? So what I'm going to show you next is how to set up your financial structure so that way you can build upon it and create wealth. Now, because I'm in real estate, I'm going to lean it towards real estate. Now at this point, we're making so much money in our business that we no longer need to keep our full-time job. Basically, our part-time business income outperformed our full-time job income. So it's time to get rid of the job and focus on growing your business, all right? Now, for me, I was an active real estate investor. I started off wholesaling, and then eventually I got the confidence and gained the skills and capabilities and relationships and money to move into rehabbing, just like you see on those HGTV shows. I started rehabbing older houses, turning them into big, beautiful houses. Then eventually I started spec building houses, and I moved into the multiple $million-dollar house range. And I grew my active real estate business. And like I said, I had my active real estate business account, I had my tax account, I had my personal bank account. All right, so all of that is the same. But now what's happening is you have checks pouring in, right? Your business is starting to scale. You have systems and technology and automation. You've now built a team. You're delegating. You're deleting things that you shouldn't be doing. You are optimizing your business to scale. And as these checks come pouring in, right, they go into my real estate business account. My taxes get paid. My draw or paycheck comes down to my personal bank account where all my lifestyle stuff gets taken care of. But now I'm going to add a couple more financial pieces to make sure that we are always capable of taking advantage of every opportunity that comes our way. One piece is setting up an unsecured line of credit. All right, most banks, most credit unions will give you at a certain period of time in your business's evolution. It might be within a year, something like that. I guess it could depend on how much money you have in your business account. But around the 1 year mark, I went back to my bank and I said, hey, could I get an unsecured line of credit? And they said, sure, we can do it over the desk for up to $100,000. I said, sure, let's do that. And next thing you know, a few weeks later, I had a $100,000 unsecured line of credit. All right, this is based on the health of my business, and basically if I need that money, I just go into the bank account, I draw it out, it moves right over to my business account, and I can spend that money for marketing. I can spend that money to hire people, use it as earnest deposits. If you can afford to buy real estate under $100,000, you can use it for that. And it's at a pretty good interest rate. So that's one financial thing I want you to do. The other one is to start working on getting good business credit going. All right? I think they call it Dun and Bradstreet, but you're going to want to get a D&B number, and you're going to want to set up with your local bank a business credit card. And maybe in the beginning, they give you a $1K limit. And you just, instead of using your cash from your business, right, because we still have all these expenses and write-offs, instead of using your cash to pay for your expenses, what you're going to do is you're going to load up your credit card, and you're going to put your marketing on your credit card, or buying your materials on your credit card, whatever, and every single month you're going to pay your credit card off. And eventually you're going to ask for a credit increase, and you're going to keep increasing it, and every 3 to 6 months you're going to ask for another increase. You'll get to a point where you have 25 to 100K in business credit limit, all right? In between the two and your active real estate business, now you're actually set up financially to win this game. Now, here's one more piece of advice. People ask me all the time, Sperber, how much money in my business should I dedicate towards marketing? So just as a little side note, I like to always apply 10 to 15% of whatever my expected gross revenue is towards my marketing expense. Okay? And I almost don't even want to say marketing expense. I should say marketing investment, because marketing is an investment in your business, because if done the correct way, it'll help you grow your business, and it's a self-fulfilling loop, right? So you want to spend money on marketing, right? Don't be afraid to spend money on marketing. But here's the last piece. And when I got here, it was like, okay, I've now created an environment that I have a kick-ass job, right? I'm making over $1 million a year as an active real estate investor. But what happens when the day comes that I want to retire, or I want to, not work for 2 or 3 months? Just be able to do whatever I want, whenever I want, with whomever I want. How do I get to that generational wealth stage? Well, like I said, you can build a business to get there, or you can invest your way there, which is this piece right here. And in order to do that, you have to set up one more bank account, all right, which is your passive real estate investing savings account. And what's going to happen is, whenever let's say you're making $50K a month in income right there, you're going to take 33% of it. It's going to go here. 33% is going to go over here to your tax account. Okay. 34% can come here. All right. And you can either do one of two things. You can either take a portion of this or a portion of this, and you're going to move it over to this investing savings account. And you're going to put 10 to 20% of your total monies over into your passive real estate investing savings account. And when you get enough money saved up, let's say it takes you a year or 2 years to save up enough money, what you're going to do is you're going to start buying rental properties. All right? These are duplexes, triplexes, fourplexes. It could be single family, but I would focus on maybe some of the smaller multifamily in the beginning, things that produce you good rental income. All right? And the way I like to structure it is I create one LLC for every 3 rental properties that I own. And there's 2 schools of thought. One is one LLC to 1 rental property. I think that's a little overkill. I like to have 1 LLC to 3 rental properties. It gives me some anonymity. It helps protect my assets. And if a tenant slips and falls and say this rental property right here, they can't go after my whole rental portfolio. They can only go after potentially the other properties in that particular business. And what I like to do is I save up money, then I go buy a duplex. Then I save up money and I go buy another duplex. And I save up money and I go buy another duplex. And instead of living off of the cash flow, let's say this produces $300 a month in pure cash flow. and this one produces $600 a month in pure cash flow. Instead of taking this profit and moving it over to here and living off of it, don't do that, okay? Instead, reinvest those profits to pay down the mortgages faster, all right, and to buy more rentals. And there's a strategy that I teach called the snowball strategy. I'm going to put a video right here that's going to break down how that strategy works. This is how you start building a really big rental portfolio and growing your wealth. Once I understood this, short-term sacrifice, moving the money, living below my means, moving the money around in the proper way, forcing myself to save, forcing myself to buy real assets, forcing myself to not take that money but keep reinvesting it over and over and over and over until I snowball it. And I had to do this for 10 years, all right? This is how long it took me to build my wealth. But for 10 years, I sacrificed. For 10 years, I lived below my means. And I forced myself to become financially intelligent. To recap, the 3 phases of creating financial intelligence are, number 1, identifying where you're starting from. Most of us start off broke, and we need to divorce that poor story, that poor mindset, and we need to marry the truth, all right? We need to set up a financial foundation to be able to grow from, which leads us into phase number 2, which is creating multiple streams of income and creating that financial stability for you and your family. And then eventually you can move into phase number 3, which is investing in assets, growing your net worth, and building generational wealth. Listen, to become financially intelligent, you have to do it for yourself. Nobody's going to do this for you. Nobody's just going to hand you your hopes and dreams. Nobody's just going to give you this giant pile of money and everything is going to be okay. You have to learn this stuff and go out there and sacrifice and put it to work for you and for your family. I'm Cody Sperber, the Clever Investor. That's all I have for you in this video. I hope you got something from this. If you did, smash that like button. Please leave me a comment down below. I want to know, do you like videos like this? Do you want me to keep doing these kind of financial intelligent style training videos? Do you want more real estate training? You want more mindset stuff? Put a comment down below. Let me know your thoughts. And until next time, I'm Cody Sperber, the Clever Investor, signing off for now. Take care. Comb your hair. Sperber out. Oh, hey, didn't see you there. Hey, listen, while you're here, why don't you click the tab in the upper right-hand corner and grab my new book, How to Flip Houses with Little No Money Down. It's a step-by-step guide on how I got wealthy in real estate and how you can too. Hope it helps. Oh, don't forget to watch the 2 videos also.